welcome, ladies and gentlemen. I'm Hiral, Dadia. We have Rakesh, Biyani, Managing Director at Future Group, joining in. Rakesh, unprecedented times that we have been talking about. It's clearly a black swan event, if you would like to call it so, that probably you're not likely to have one in a lifetime again. What is the sense that you're picking up on the entire impact on a global front as well as on the economy front right now to start off with?
Well, I think the impact is quite severe, right? You have to think through if the economy is put on pause and no economic activity is really happening of any significance, the damages are very, very huge, right? And it's not that it's a one-day holiday or a two-day holiday. It's now almost into about 40 plus days that the business has been shut and almost zero activity, no movement of people, and with a complete uncertainty in the way forward also. So when all of that seems to become even more difficult. And I think globally that's a challenge. I think already we are seeing record unemployment rates in countries where there is a process of registering for unemployment benefits. And so that itself is a concern. In India, if the statistics is right, and we're looking at a 25-26% of the population becoming unemployed, that is challenging in the period ahead. Because it's not only the 25-26% people who remain unemployed, but also there's significant talk about cutting down on salaries, cutting down on costs. Maybe the expansions are going to be put on hold. So all of this is something that we're not used to. In the last few years, last 2 decades also now in this country, everything's about growth, growth, growth. And if the growth comes to a screeching halt, which is what is happening, it is going to be a challenging period. And a period where I'm not too sure if anybody really has an experience in India how to manage it. So
Correct. Yeah. So overall, in terms of business, if you have to look at Future Group, what's the kind of impact you're seeing on ground? Because clearly footfalls have gone down. Now, has it had a major impact, especially on the operating side?
Oh, it's a significant impact. I think when you look at all our businesses, almost every one of them has got impacted. Some of our businesses are fully shut for the last 40 days plus now. So be it our departmental store business, be it our apparel store business, they're all shut. Our supply chain is completely disrupted. Warehouses are not operational. Many of our factories have been impacted, food processing plants. Even though they're permitted to work now, unfortunately, it's not easy to make things work on an independent basis. Supply chain has a lot of involvement of other vendors, and unless all the entire supply chain sort of starts working, that's become very difficult. So that's definitely a gap which is there. And when it comes to our supermarket and hypermarket business, while they're operational, selling essential commodity, but many of our hypermarkets do sell other products also, and those have not traded for the last 40 days now. So even there, the impact is there. On top of it, getting customers inside store has been difficult. Social distancing norms are being adopted. The number of people that we can sort of manage inside a store is now restricted. The number of staff who can work is restricted. So it's a complete new world that is sort of emerging. And currently, almost all stores are operational very limited hours. In some cases, only 2 to 3 hours, and in max case, 6 hours of operation. So all of this is limiting the kind of business model that is getting created. What we have done for sure is that we've recognized and we've sort of ramped up our home delivery business. So a large chunk of the business is happening on home delivery. And that is something that we are quite committed to, and we should be in a position to push that up higher. In fact, I'm just looking at some Google data. Big Bazaar, the shopping website that we have on the phone, was among the top 3 most searched and used website in the country over the last 4 weeks or so.
Right. So overall, Rakesh, what's the kind of impact are we seeing? By how much are you expecting the operating costs to go up from here on? And secondly, if you have to take the first quarter into consideration, Now, across businesses, yes, it is going to be a revenue loss. However, somewhere you are shielded being in the retail space that yes, there will be some revenues that will come in. But I think majority of the companies, majority of the brands are just saying, we don't want to make losses, but we just, our aim now is only to at least break even in FY21. For Future Group, then, what is the sense you have? By how much are you expecting operating costs to go up? What's the kind of degrowth are you expecting in terms of revenues?
I think so. It's actually a bit early to say
Okay.
what the whole year will look like because none of us really know what is the real impact
Mhm.
that is going to be there for the because of the pandemic. Will it stop in 3rd of May? Will things go back to normalcy, or will actually start opening up? Is it the end of June where we would have a vaccine in place, or is it end of September? Will there be a rebound of the virus? There's just far too many unknowns today. Now, with that, I would think that we definitely do make a business plan, but this business plan keep getting revisited. Right? We made a plan at the end of March. We set our plan. We said that we'll be back operational on the 15th of April, and then it did not happen. So now we're going to redefine our plans. We're thinking that we're going to be operational on the 3rd of May, 4th of May. So it's a lot of exercise that we have to keep doing. But will that be the plan? I'm not too sure. Right? So the focus is yes, everybody wants to break even. Everybody wants to sort of be in a position to ensure the fact that they don't have a large loss in their books or that actually are on the positive side. And for that, one is working on the expense side. Some of the expenses, because the stores are closed, have already come down. And in some cases, we need to keep redoing. The organization may require redefinition. So a lot of work has to be done. The biggest cost real is rental, and that's a lot of work which has to be done in terms of really talking to the landlords of the malls and figure out what is the win-win formula that we can create. And I think the key there lies is that we would ultimately require certain support from the government or from the Reserve Bank of India. I think majority of the real estate companies, mall operators, landlords, they would require a certain amount of financial forbearance has to come into place for 12 to 18 months, where the LRDs or the term loans which are supporting the construction of those malls, they would have to be given certain pause on their principal repayments. And if that happens, then I think retail would have a chance to survive the storm which is ahead. So it's early days, but I would say that it's not all lost. India still is a very promising market. We do have a very young population. With almost all adversaries that we've had in the past also, we've all bounced back with better rigor. And I'm quite hopeful that the same will happen here. But I think the damage that has already taken place, as long as there is good support across the board from the financial institutions and the government, then the chances of surviving this is much higher.
Right. So, once you already mentioned the kind of steps that the government needs to take as well. Have you already initiated any force majeure in terms of your rentals, or are you talking to, places in terms of doing a revenue share model from here on? Because that's what a lot of retailers, a lot of theaters are looking at now.
Well, I think the revenue share makes the maximum sense today because it's showing the fact that you're de-risking the business to some extent. But while it does de-risk the business for the retailer, I think we need to also think about the landlord and we need to think about the mall operator. Will he have to take too much risk then? And that would be not fair. I think any transaction, it needs to be a fair transaction. It has to be a balance of risk across all people. And as long as that happens, we have to find a path where both parties are able to sacrifice something to make business viable. But I was talking to a couple of mall developers earlier in the week, and I think what stood out very strongly was the fact that just the two of us can't solve the problem. We would require the government and the Reserve Bank to sort of help us. Right? Without that, it may not be easy. So let's hope. I think representations have been made with them, and everybody knows that this is a once in a lifetime kind of a situation, unprecedented, and it requires out of the box solution. I'm not too sure if force majeure, as in clause and letters being written on those basis, are going to solve this. This is going to be about one-to-one negotiations, appreciating each other, and ensuring the fact that together we survive.
Right. So overall as well, you mentioned that again, your deliveries have increased. So if you could just help us understand by what percentage has the deliveries gone up, and in consonance to that, are the costs also increasing? Uh, and what's the impact you see at least in the first quarter?
So the rise in delivery business is more than 10x.
Okay.
And that's because the share was much smaller, it's much larger share. And I think that's going to remain. And is there there is a cost to do business which comes into place. I think we have been, following very, very stringent norms on social distancing, limiting the number of people per store per hour, reducing the number of people working in the store. So a lot of those have happened. Sanitization standards have increased tremendously. So, extra hours are required to ensure that the store can become hygiene enough for the next set of customers the next day. Some amount of supply chain costs has gone up because the availability of trucks on long distance is not easy. See, typically the truck route is what you bring in and then something goes back on the truck. Then there's uncertainty on what's going to go back. You have to pay two-way charges, literally. So all of these are problems and costs of disruption. So I'm not too worried about these extra costs. I think it's about serving the customer and serving the needs of the customer. That's what our first job is. And we need to work harder to ensure the fact that we are able to create a safe environment. I believe retail stores are important. Without retail stores, it's not easy. Even an online grocery model cannot scale up unless it has spaces which are closer to customers' homes. And I think the omni-channel route, which is the kind of partnership that we have with Amazon, that's a partnership for the future. And I think we need to sort of work harder. Put together, we will try and sort of fast-pace some of our development plans. And that's as soon as we have more clarity and we have more freedom of people moving in to offices and into stores, we would look at expanding that partnership to more markets.
Right. So Rakesh, how long do you think it will take to reach the pre-lockdown sales numbers?
I think it completely depends upon which category we are going to look at. Essential groceries, etc., in maybe another 3 months, and we'll be back to normal numbers. Right? I guess that's a must-have consumption articles. Right? So they should be back. The only thing that's required to be done is I think we need to ramp up delivery more. We need to be able to serve more orders online or to do click and collect. Right? We need to get more product into the store because the assortment has shrunk dramatically because of non-availability of products, etc. Inconsistency in supply chains. The moment that settles in, that should move it forward significantly. But on other categories like clothing, general merchandise, I think general merchandise should be back to normal very shortly. Again, along with about 3 months. What I find is the fact that with very limited domestic help available at home, many people are doing their own cooking, spending a lot more time in the kitchen than what they have done in the last many years. And all of a sudden, they start realizing the change that they require. Maybe they need new toasters, they need new sandwich gridders, they need new tawas, new pressure cookers. So quite a lot of demand exists even today. Unfortunately, only in select markets this is allowed to be sold. So we have been selling, but we clearly have a lot of inquiry. The consumers want to change these products. So that is something which is going to sort of take up. Apparel, I would say that again, there are two parts. There is value apparel and then there is branded apparel. Branded apparel may take a little extra time normalize, but the value apparel, like what we do within FDB, I think in another 3 to 4 months, and we should be recovering back very strongly.
Right. And overall, what's the sense on the working capital front right now? Because I know you mentioned as well that the relief needs to come on that front. Employees now, what's the employee situation? Are you expecting any job losses at your company level, or probably salary cuts? Or if not, how are you going to manage the rolling salaries on a month-on-month basis when the revenues are shrinking, when the working capital is shrinking? And with that, I mean, if the government does not really come in at the demands that the retail industry is putting through, how does a retailer survive?
It's just not about retail. It's many industries which will not find it
Correct.
difficult, right? So I think on working capital, yes, it's a challenge right now. You have a lot of inventory which is not being productive. If it, as and when it's allowed to become productive, it will take some time before it will start selling, and that's going to have its own set of challenges. Right? So what we've been saying as an industry is the fact that we need about 30% extra working capital across all lines, funded and non-funded. What
Okay.
that will allow us to do is the fact that not only about to open up some amount of money to pay wages, at the same point of time kickstart the business model. Because we need to start paying more vendors, and the vendors will use that money to bring in new products. And that's the only way you kickstart the economy. You can't kickstart it with everybody's money is stuck here and there. If a moment economy opens, if the vendor asks me to pay him, I have not sold anything. How do I pay him?
Correct.
Right. So, and that's the reason there's a need for a 30% extra working capital. Unfortunately, while the RBI has stated the fact that banks may lend people, businesses were impacted by COVID, but I think the banks are averse to take any risk right now, and that is not going to help the country, right? Because and especially the small and medium enterprises and MSMEs, etc., are very, very impacted. And this time around, in fact, the large companies are equally impacted. It's not an easy time at all. So the banks will have to intervene, and the government will have to intervene to make it mandated to support these businesses. As far as salaries, I think it's about being practical. It's not about not paying dues to
Correct.
employees,
Yeah.
but it's to ensure the fact that you can balance between cash needs today and how much you can defer the cash for a future date. In terms of the desire is not to sack anybody, but I think there will be some natural attrition which will happen because of the delay. Maybe people will just shift back to hometowns, etc. That could happen for some time, and that's something which one will factor in. But when the business picks up, then there's no worry, and if it does not pick up to the level that is being discussed today, uh, maybe we'll have to take appropriate steps to ensure that we have a balance.
Right. Rakesh, overall as well, right now you just mentioned about the working capital crunch that every industry is facing. For retail, what is the debtor and creditor cycle looking like? I mean, if suppose, for example, if it was 30 days or 60 days, for how long do you expect it to get stretched?
I think it's going to get stretched till the time that you are able to not restart the cycle, right? I think it's a unique situation, right? That uh, you want to do business, you want to sell, and you want to pay everybody. You've not been allowed to sell. Now, if you're not allowed to sell, how do you service the liability? You cannot. So the liability also will have to take a back seat. There's no choice on that front. Now, if I don't want the liability to take the back seat, then that's the reason I'm saying either the bank has to allow us to get some extra working capital. Now, and for that, I would say that the government would have to intervene, because if the banks are going to continue to park the money with the central bank, and businesses will not get the funds that are required. And I don't blame the banks also. I think the banks are also, at the end of the day, businesses, right? And they are also accountable to their shareholders. So they will take whatever is required to overcome the risk that is there. But somebody will have to intervene, you know. So let's see. Let's hope that we get the required support. Every industry requires it. I think retail is equally affected as compared to others, and there is a lot of small, medium, and large. And I think the most important here is the fact that it's all types of industries are impacted,
Absolutely.
right?
And no one's safe.
It's not only about a small and medium enterprise which is impacted. It's even the mega enterprises. Everyone is impacted, and everybody will require support. Maybe the different types of support windows that are going to be required.
Right. Rakesh, my last question coming to you is, as the industry is going to the government for some kind of moratorium, for some kind of relief, a lot of startups, especially in the retail space, if you have to talk about FMCG companies, you have to talk about, budding enterprises, a lot of them have been coming and, for example, if I have to go to a future group, or if I have to go to, say, a Star Bazaar or a food hall, what happens is a lot of merchandising fees that are charged. When you have to list your products with enterprises like yours, those are charged. Do you think you will be in a position to give them moratorium as well? Because imagine, companies like yours are already facing a trouble. These are budding companies, budding enterprises. You think you guys will be in a position to give them that relief?
I think we've not really thought through at that level right now. Because clearly the thinking is not about what new we want to do. It's about what do we manage, how do I manage the current. And so it's a bit too early. I think we need to just restart our existing business, make the cycle smarter and faster again. And as long as we settle down there, I'm sure we will address all these issues. Uh, we will have an open mind. I'm taking the feedback and I'll definitely brief the team. They'll keep it in mind. But I think it's a bit too early to sort of think about what new to put inside the store.
Right.
Right? I think whatever was selling in the past, if we can just get that back again in the store on a consistent basis, get the people back into our stores, get the customers back into the stores, that is far more important right now.
Right. All right, Rakesh. Pleasure speaking to you, and thank you for sparing so much time for us as well.
Sure.
Stay home, stay safe, and we will
Yeah.
speak yet again as well once things open up to understand what the on ground scenario looks like as well. Thank you, Rakesh.
Great.